The outreach of our program today is about 300,000 female clients. In Pakistan's terms, we are the third largest microfinance provider. However, in terms of women's access, we are the largest. This is for the foundation. We have about 153 branches, about 2,000 staff spread over Punjab, which is one province, and Sindh. We are also thinking of moving into rural communities. We are essentially an urban and peri-urban program. We offer a series of financial products on the lending side, which is essentially starting with a productive income generation loan, then a consumption loan, and we also provide home improvement loans to very, very loyal and older clients, mature clients who've actually demonstrated their credibility. We also offer insurance, microinsurance. In fact, we were the first microfinance provider in Pakistan to convince an insurance company, one of Pakistan's largest insurance companies, to start servicing the bottom of the pyramid. This was in 2000. And as a result of that, today there are almost 2.5 million lives that are covered through insurance by different providers. We also piloted health insurance a couple of years ago, but interestingly enough, the pilot had mixed results. People were not willing to pay for tangible benefits. So now we are thinking about doing a health savings program, which will help people build up for contingencies, like for health contingencies, and be able to pay for that. We also have another entity, which is the Kashf Microfinance Bank, which we established last year. The bank has 21 branches right now, and it has 17,000 clients with 5 million outstanding in loan portfolio. And we have about 28,000 depositors in that, with 1 million outstanding in deposits. Deposits was something that we were always interested in introducing, and since about 5 years ago, we seriously began to think about establishing an arm which could provide deposit services. There are several reasons for why deposits matter. The first was closing the loop for clients. It's very important. It's not just enough to do microcredit. If you're wanting to impact on women's lives in particular, if you're wanting to change poverty standing of households, without asset accumulation, that's not going to work. So that was the first question that we had. Could we really close the loop? The other thing was, as a not-for-profit, we could only grow to a certain level. We could maybe add another 500,000 clients by raising more debt. However, in Pakistan, the economic environment changed very drastically a couple of years ago, and the cost of borrowing on the commercial markets really skyrocketed. And we began to rethink the business model. That's one of the reasons why sustainability today has been of concern to the foundation. So the idea was, how do you economically mainstream an institution that can have its own resources to on-lend? That was the second question that we had. The third reason was really, again, to demonstrate. Kashf, as you know, has been a pioneer in the Pakistani market, whether it was in terms of accessing women, whether it was in terms of providing specialized services, whether it was bringing additionality in terms of financial options available to the poor. We also felt that it was important to pioneer a deposit-led model for the country. There are other microfinance banks, but they're not predicated on growing through deposits. In our model, the idea is that we must be a deposit-led institution. So these were the three reasons that we had in front of us, questions that we had in front of us. So in 2005, we invited Axion to come over and help us look at transformation. And the question at that time was, we had about, in 2005, we had about 100,000 clients and about a network of 75 branches. And we wanted to see if we could transform the entire institution into a microfinance bank. We realized that was going to be very time-consuming, and the issue of an asset-based institution and a deposit mobilizing institution, the cultures clash. They're very different entities. So we began to realize that the cultural shift may be very, very huge. Therefore, it was maybe better to set up a greenfield, however, to segment the market, not on the deposit side, but on the lending side. The bank, as a result, now does more the bottom tier of the SME market, the small enterprises market, and offers loans that are more than $1,000, while the foundation does poverty lending. Its average loans of $125. The idea was to build a portfolio to test out individual lending in 2005, which could then be the business segment that we would transform into a bank. So in 2005, we began to replicate the Latin American individual lending program for the first time in Asia. As a result, now there have been replications in India, in Bangladesh, and this we did through the Women's World Banking Network. They were very, very, they were very much part of this whole strategy. Once we built up that portfolio, we transferred that to the bank last year. We had a whole business strategy on the bank and where it would grow. However, in addition to that, we realized being a deposit-focused entity, that was the reason why we wanted to set up the bank, we also had to build a deposit mobilization strategy. In addition to the regular business plan, which Axion built with us, we also utilized the opportunity to sit back and really think very clearly about what deposits meant for us on the culture, on the HR, on the IT, on the information, on the product design, on the market segment, and we built or put all the building blocks together, including how do we do the management and administration on this on the back end, the SOPs for operations, the operation manuals, and of course the risk management, the ALCO that we needed to put in, the entire functionality of risk management that we needed to propose. So we began all this process in, actually, to be precise, June 2007. The actual rollout of savings happened in June 2009. So there was a 2-year window where we began to put the building blocks together.